Hi, Investor Nation and Tasty Nation. Just today, something very strange happened with the yield curve. So I'm going to talk about that in this video. Okay, so here's the yield curve on the left here. Recall that I've shown this in previous videos. And if you look at my video called How to Bet on Interest Rates, Trading the Yield Curve, I explain a lot more about what's going on here. And also make sure you check out my video, How Do We Know What the Federal Reserve Will Do? That one's very relevant as well. So right now, the yield curve looks like this. It's very flat. The 3-month interest rate is relatively low, but then the 2-year, the 5-year, 7-year, 10-year, 20-year, and 30-year interest rates are almost all exactly the same. They're hovering around 2.32%. This is very strange. This only happens once every few years, so it's a very unusual occurrence. Some people think that this might be predictive of some turmoil to happen in the economy, a recession or whatever in the future. Personally, I'm not going to speculate on that. I'm just going to talk about this as being an opportunity to make a trade. So the yield curve here, it's defined here as very flat. But if we back up just a few months ago in 2021, you can see that this was a normal yield curve. So as you would expect, interest rates get higher as you go further out in time. But right now, it's so flat right here. And we actually went inverted between the 7-year and the 10-year interest rate. That means to lock in your money for 10 years, you get a lower interest rate than locking in your money at 7 years. It doesn't make any sense. That's why this is so unusual. And also to lock in your money at 30 years, you get almost the same interest rate as for 10 years. Again, it doesn't make any sense. So when something like this happens, it's something that we expect to be temporary. How temporary? Well, it's hard to say. So if I was to trade this, because this is such an unusual occurrence of having the yield curve so flat like this, if I was to place a bet on what I think might happen to the yield curve in the future, I would have to put on a Steepener, because most of the time the yield curve is steeper like this. But right now, because it's so flat, chances are it's going to go steeper in the future. The problem with making a bet like that, though, is you don't know how long it will take. It could take a few months. It could take a year to steepen. So if I'm willing to hold on to that trade for a significant period of time, I'm betting that I eventually will make money on that. So the small exchange has 3 of these products that you can trade. So let's pop over into my trading platform. Here I've got the small exchange products in my watch list here. And the 3 main ones that we're going to talk about are the 2-year treasury yield, the 10-year treasury yield, and the 30-year treasury yield. So these are the symbols for Interactive Brokers. If you're using Tastyworks, of course, they would actually have different symbols, but Interactive Brokers has these symbols. And if you haven't noticed, I'm also wearing my small exchange shirt today, supporting the small exchange. This is a great opportunity to use their products with very low fees. So here we have the 2-year yield contract, and you can see a chart here. It's been rising over the last week or so. And then we have the 10-year yield there and the 30-year yield. So the 2-year yield, this contract is trading at 23.76. And recall from one of my previous videos, if I just move the decimal place over one place, that would equal a yield of 2.37%. So this just means that if you were to lock in your money for 2 years in US Treasuries, you would get an interest rate right now of 2.376%. So nearly 2.4%. And if you were to do the same with the 10 years, if you were to lock in your money for 10 years, you would actually only get about 2.4% as well. It's almost the exact same interest rate for the 2-year and the 10-year right now. Again, it doesn't make any sense. That's why this is such an unusual situation. And if I was to bet on this going back to some kind of normalcy, I would go long the 10-year yield and short the 2-year yield. Also, we can look at the 30-year contract. So the 30-year yield is trading for 25. So again, move the decimal place over by 1, that's 2.5%. So you're only getting 0.1% higher than 10-year yield. So just to recap, if I lock in my money for 2 years, I'm getting around 2.4%. If I lock in my money for 10 years, I'm also getting about 2.4% interest. And if I lock in my money for 30 years, I'm only getting 2.5% interest. Again, this doesn't make any sense. So let's try and trade this. There's a bunch of different combinations. Okay, so here's the flat yield curve we have right now. And if I was to take a snapshot of that, to keep that on the screen and then just go back in time a little bit, I would expect the yield curve to go back to some kind of normal looking shape like this, which is upward sloping. So if I wanted to bet that this flat yield curve here is going to get steeper, I would go long the 30-year and maybe short the 10-year. Or I could go long the 30-year and short the 2-year. Or I could go long the 10-year and short the 2-year. Or I could go long the 30-year year and long the 10-year and short the 2-year. So there's a whole bunch of different combinations I could do here. So I've put a few of those combinations here in my trading platform. For example, if I go long one 10-year and short one 2-year, I would have actually lost on that trade. That would have lost about 2 points over the last week or so. So that's about $200. So this is a small trade. The other thing you could do is long a 30-year and short a 10-year. That moved also about 2 points over the last week or so. So that would have been about $200 for a one lot. And the other thing that I'm interested in doing is maybe going long a 10-year and a 30-year and short a 2-year. And that curve would have looked like this. So if I had on all three of those in that combination, that would have lost about 3 points over the last week or so, or about $300. And the other combination that I currently actually have on right now is I'm long a 30-year, I'm long a 10-year, and I'm short 2 2-years. So this is like a super steepener, right? I really want the yield curve to steepen to make money on this. That one has gone down almost 6 points over the last week or so. So that's $600. So this is a bigger trade, but you can choose any one of these combinations and trade this as small or big as you like. Of course, if you really wanted to, you could bet that the yield curve is going to flatten even more and even go inverted. So go downward sloping instead of upward sloping. But I never make that bet because that's such a rare occurrence. I don't like to bet on something that's a rare occurrence. I like to bet on something that's more likely to happen, which is steepen, because most of the time the yield curve has an upward sloping shape. Okay, so if you were in Tastyworks, you could actually trade these pairs that I have listed here. But because I'm in IB, I have to do these separately. So to do that, so say I wanted to do this one here where I'm long a 30-year, long a 10-year, and short 2 2-years. So I would go to the 30-year SME, buy that, put in a limit price, check the margin on that. So that's a $2,500 product. I'm only paying 29 cents commission to do that. And my brokerage is asking me to put up about $700 for that one leg. So I would transmit that, pay the 29 cents, then go to the 10-year. And I want to buy one of those as well, put in a limit price. Again, pay another 29 cents here. This one is asking me to put up $750, transmit that, and then go to the 2 years. And these ones I want to sell because a steepener, I'm betting that the farther end of the yield curve is going to go up faster than the shorter end of the yield curve. So as a hedge to my other two legs I just put on, I'm actually going to sell two of these, and it's asking me to put up $1,000 for this. This would be 59 cents because there's two contracts. And there you go. So for a couple $1,000, I could put on kind of a bigger version of this trade, but of course you could do just one of these legs if you really wanted to and put up just a few $100 to do this and make the trade super, super small for whatever you're comfortable with in your account. So just to reiterate that in a slightly different way, if I was betting that interest rates were going to go up over the next little while, and I thought this yield curve might steepen a bit, but I wanted to trade it super small, I could just do it with one single contract, put on a super cheap version of a steepener. I could just go long a 10-year yield and don't sell anything else against it. That would be another way to trade a steepener really small. You're just betting that the 10-year interest rate is going to go up over the next while, and you don't really care what happens to the 2-year and the 30-year in that case. Okay, well, thanks for watching. I hope that gave you some ideas on how you might want to trade the yield curve. I love trading the yield curve. I've been trading the yield curve for probably a decade now, but I love doing it using the small exchange products. This is a great way to trade it small. And even if I'm wrong, I'm not going to be worried about that trade. It's just a way to get engaged in the market. And when I have one of these trades on, then I have skin in the game, and I get super interested whenever I hear anything in the news of anyone talking about interest rates or the yield curve or a recession coming up. These are things that I'm super interested in and I get excited about to follow. Okay, well, thanks for watching. And if you haven't seen my other two videos on the yield curve, I'm putting them down below right now and in the show notes. See you next time.